Welcome to the Smarter Money Life podcast powered by Forum Credit Union, your go-to podcast for all things personal finance, where we break down complex financial concepts into simple, actionable steps. Whether you're looking to save more, invest wisely, or plan for your future, we've got you covered. Join us each episode as we bring you expert insights, real-life stories, and practical tips to help you live a smarter money life. Hello, everyone. Welcome back to another episode of the Smarter Money Life. I'm your host, Andy Mattingly, and today we're diving into a topic that's really special for these times. It's kind of what we're experiencing now, and really what we want to focus on is how you can learn from a turbulent market and become a smarter investor, because that's what we all want to do. Now, for a lot of you, you've experienced huge market growth because, that's what we've seen over the last few years. But now we've seen some things that are kind of coming back to reality. And it's always important to remember that in every challenge, there's an opportunity for growth. And that's why today I have joining me our senior financial advisor from Forum's Private Client Group, Tammy Marrs. Tammy helps her clients through these situations and has been doing it for several years. So I think you're really going to find her insights, very meaningful to what you're doing, whether you have a small investment or you have huge investments. Tammy, thanks for joining me today.
Great. Thanks for having me, Andy.
Well, we're going to jump right in. Let's talk a little bit about, market volatility, because it can be really unsettling for a lot of people and it gets them scared. So can you kind of explain what it is and why you think it presents a unique opportunity for growth and learning?
Absolutely. So in the simplest terms, volatility is how much and how quickly prices move over a given period of time in the market. In the stock market, increased volatility can very often be a sign of fear and uncertainty among investors, but it can also be a great opportunity for investors to leverage those short-term price variations. I think it's important to have an investor mindset that thrives on making informed decisions in those times. It's important to stay grounded as you navigate market movement that might unsettle those less prepared investors. And also in times of working through volatility, having a professional that can help you understand what is going on in the markets and should any action be taken, or is it best to stay the course, is very important.
And you said a word that I hope that all of our listeners keyed in on. We all should have an investor's mindset, regardless of how much investments that we have. So I really like that term. That's a very good term. So you touched on a few things, but what are some of the key strategies that you think people should be aware of, and how might they implement these strategies? Because you talked about having a plan and all of that. So will you dive into some of those and share those with us?
Sure, absolutely. One key strategy for navigating volatility is diversification. While diversification is not going to shield you from all losses, it will help to mitigate risk and prevent you from acting emotionally during downturns. Also, knowing the amount of risk that you're comfortable with prior to allocating your assets, along with the amount of time horizon you have, are key parts of diversification. And then revisiting your portfolio from time to time to make sure you're still allocated properly.
Yeah, and I think diversification is something that some people get confused on. They think if they just buy different stocks, maybe, like they buy 5 different pharmaceutical companies, they think they're diversified. And that's not really what we're talking about, correct?
That's correct. Yes, you want to have representation in all asset classes of the market, not just in one particular sector.
Yes. Okay, very good. So if you don't have, or I guess the better way to say this is, if you have non-retirement investments, are there some advantages that you can get in these kind of market downturns that can help you financially, even in the year like this year that
Absolutely.
You could do?
So year upon year, we're looking at those non-retirement accounts to see if there are any tax advantages that we can offer our clients. And one way in doing that is tax loss harvesting during downturns in those non-retirement accounts. In volatile markets, tax loss harvesting can offer the opportunity to realize a benefit from selling at a loss that could ultimately lower the individual's annual income.
Yeah, and we're not giving tax advice here,
Absolutely.
but basically I think what is so good about this strategy is that you can take a loss and it's actually a win because you're just lowering your annual income because you get to take those losses off and then you pay less taxes on it. And we all are trying to find a legal way to pay less taxes, right?
Yes, that is right. I'm yet to have someone ask me how they can pay more tax.
Yeah, I don't think you're ever going to find that one. So you talked about this. What are some of the mistakes that investors can make during these times?
I think allowing your emotions to get the better of you is the largest mistake. A major benefit of working with a professional is having someone to talk through those difficult times in the market before you jump in and sell at a loss or maybe stop investing altogether. If you're working with a professional, you've discussed your goals and you've worked together to develop a plan to help you meet those goals. It's the time that you spend in the market that's going to help you meet those goals, not trying to time the market. Timing the market very seldom works, as individual investors generally sell at the bottom and then they jump back in at the top of the market.
And I've heard you say this a lot of times. It's time in the market, not timing the market. I think that's good. And one of the things that I think that is important for people to realize is we now have at our fingertips. I can pull out my phone and see what my investments are every hour of the day. And I think that's a detriment. I mean, it's positive because you can see what's going on, but that's a detriment because it gets you really nervous. And then the news media and everything else. And one of the things, and I just want to see if you agree with this, what happens with the Dow Jones and the NASDAQ doesn't necessarily mean that's happening to your investments, correct?
That's exactly right.
And go ahead.
No, I was just going to say the noise out there, whether it be political or economic, people respond to that and they sell. If you are not selling in your account, you're not realizing those losses. Yes, you're seeing some fluctuation on paper, but you're not realizing those losses like those individuals.
That's a good point because I think people think they've lost something, but they haven't lost anything because they still have those shares. And what goes down usually comes back up. And they feel like that they look at it. I think sometimes too many people look at their investment accounts and feel like it's just like their insured accounts that they have, here at Forum. Well, I have $150,000 in there and in my investment account and it went down to $125,000. It'd be like someone took $25,000 out of their account here at Forum. And that's not how investment works. So that's really important for people to realize that you haven't lost anything until you sell. So that's very good. I like that. So are there any strategies that investors should take regardless of market performance, even within their 401k?
Yes, as far as strategy goes, I think it's important to rebalance your portfolio on a regular basis. That can be monthly, quarterly, semi-annually, annually. The important thing is doing that consistently. With market fluctuations, your asset allocation will change. So that moderate portfolio, that 60% stocks, 40% bonds, very likely won't be 60-40 the next time you visit it. And when you're rebalancing, you're taking the opportunity to sell those high performers and then reinvest in underperformers. So in essence, you're selling high and buying low.
That's good. And I know for your clients, you guys do this, but I know like here for Forum's 401k, they have a little tool that you can set for automatic rebalancing. And you can put the tolerance in. So like you say, if it's if an investment gets 5% over or under what it's supposed to be, it rebalances your whole portfolio. That's just a great tool because it's like easy to do. But I feel like there's a lot of people that don't think about that in their 401k, that like there is tools out there that will do it for you. Right?
And I would agree. And, many people tend to, and I recommend it, bump that 401k percentage up a little bit each year when you get a pay increase. So that's a great time to look at, do I need to rebalance the portfolio?
That's a good point. And I'm glad that you said about continuing to increase that as well? Because a lot of people start it and then they don't ever increase it again. And then so that's good. That's good. So, as you work with clients on their financial moves, are there some things outside of investments? Because I want to make sure that people understand there's other things that you should be doing besides looking at your investments in these times. What are some of the tried and true things that you make sure that you want all of your clients to have?
Mm-hmm. So when I work with a client, I like to tell them, consider me your financial quarterback. I want to be a part of every financial decision that you make. And I like to know their entire financial picture. And I encourage every client to have an emergency fund in cash. If they're just getting started with that emergency fund, which I was there years ago, I suggest that they use the Common Sense account at Forum. That's what I used to build my emergency fund years ago. And if they have that emergency fund, those emergencies aren't quite as emergency-like. They're more of an inconvenience. But if they have that emergency fund, we're able to stick with our investment strategy because they're not calling to take money out of the account in order to cover those expenses.
Yeah.
I also think it's extremely important to adhere to a budget regardless of your salary. Otherwise, I think it's easy to let spending get out of control and maybe you lose focus of where your money's going.
Yeah, and we've heard a lot in the news about inflation. And one of the things I try to talk a lot about is that we all in our life have inflationary pressures on our spending. The more we make, and there's a lot of research that shows this, every time you get a pay increase, you intend to save all of it. But if you don't intentionally save it, within 6 months, you are spending at your new level of income because we just have those inflationary pressures on our things. So I think that's really good what you talk about there. And I also like this idea about an emergency fund. And you talk about the Common Sense account, and that's a great place to put that. One of the other things, and I know you talked about it, and we as we were talking about this podcast, we didn't think about this, but another great place to save for an emergency is HSA accounts, right?
Absolutely. People think that as they get older, they're not going to and get to Medicare age, they're not going to have as many medical expenses, but those expenses never go away. So saving in the HSA for those medical, dental, vision items is a huge benefit.
And this is another off-script discussion, but you just said something there. As people build that, there are ways that you can move those funds out into investment-like vehicles as an HSA, correct?
That's exactly right. I do that for a number of my clients. They're several years out from retirement. We want to get some additional growth for that. Generally, I recommend let's keep our deductible safe. But let's move the rest of that to an investment account and try and get additional growth.
And that's really good. And the only other final tip I'll tell everyone out there, save all your receipts for the things that you don't use for HSA, because a lot of people will say, hey, I'm just going to save this for later. Save your receipts electronically because you can reimburse yourself anytime. It can be 10 years later in current regulation, and then you can decide to reimburse yourself. So the HSA is so powerful, and I know that you talk to your clients a lot about that. So I just wanted to make sure I know we're weaving in some other things besides turbulent markets, but these are all important during those times.
Yes, they are.
We've covered a lot, and I really appreciate your time. But is there any final thoughts that you'd like to share that maybe we didn't cover that you think would be good for people to know about these times?
Yeah, I would just say, investors can find periods of high volatility stressful, as prices can swing either direction quickly. Long-term investors are best advised to ignore those periods and stay the course. Over the long run, stock markets tend to rise. Since 1957, the S&P 500 has averaged 10.26% per year. People don't always think about that. When they think about the market, they think of the years it's been down. So adopting that long-term perspective can alleviate the stress associated with daily market fluctuations. Instead of focusing on short-term movements, place your focus on your financial goals that won't likely change day to day.
That was great. Tammy, thank you so much for joining us. And as you heard from Tammy, remember, market volatility is just something that's going to happen, and it may make you anxious. But as Tammy has just shared, if we have that investor mindset, it's a great opportunity. That's all for this episode of the Smarter Money Life podcast. Thank you for joining me. I hope you found our discussion helpful and inspiring. You can find more resources on the Smarter Money Life page at forumcu.com. Remember, making smart financial decisions is a journey, and every step you take brings you closer to your financial dream. Be sure to tune in next time for more tips and insights on managing your money. Until then, stay smart and financially savvy.